In April this year, following the outbreak of conflict in the Middle East, the government announced a $1 billion package of assistance measures for households and businesses. This came on top of support that was provided in Budget 2026. Over the last few months, the government has been rolling out these measures. Businesses have received the enhanced corporate income tax rebate and cash grant. Households have received $500 in CDC vouchers as well as U-Save rebates in April and July. And the enhanced cost of living special payments of between $400 and $600 will follow in September. We moved quickly with this first assistance package when the crisis erupted to cushion the impact of the energy price shock on Singaporeans and businesses. At one point, there were fears that the conflict would escalate further and severely disrupt shipping through the Persian Gulf. Fortunately, this worst-case scenario did not happen. But the situation remains fragile. Hostilities had subsided for a period. There was some hope of reopening the Straits of Hormuz, but fighting has flared up again, and shipping through the Persian Gulf continues to be disrupted. A durable ceasefire between the US and Iran is proving difficult. Uncertainty in the region will persist for some time. As a result, we expect global energy prices to remain elevated, which will translate to higher costs for petrol, diesel, electricity, as well as certain imported goods. And at the same time, our economy has held up better than expected. Growth in the first half was healthy, supported by strong investment in artificial intelligence, and we expect this momentum to continue. But performance across the economy has been uneven. Businesses that are more exposed to supply disruptions and energy costs have come under greater pressure. SMEs in particular feel these cost pressures more acutely. Given this backdrop, the government will provide a second package of assistance measures to support households and businesses through this period of uncertainty. I will speak on what we are doing to support households, and SMS Loh Yin Ling will cover the specific measures for businesses. First, to help households better manage their electricity bills, the government will enhance the upcoming U-Save rebates in October this year and January next year. This continues the enhancements to U-Save disbursed earlier in April and July. Taken together, HDB households will receive $110 to $190 in rebates in every quarter of this financial year. This amount should fully offset the impact of higher utility bills for most households living in a 4-room or smaller HDB flat until March next year. Second, to help with daily expenses and cushion the impact of inflation, we will provide every Singaporean household with an additional $300 in CDC vouchers. This comes on top of the $500 in CDC vouchers that we brought forward to June 2026, and this $300 will be disbursed in January 2027. Third, we will provide additional support for lower-income households. We will increase monthly payouts for ComCare interim assistance to at least $250 per month for up to 3 months, with more provided to those with greater needs. We will also be more flexible on the eligibility of the ComCare interim assistance so more households can qualify for the support. This second package of government assistance comes to around 900 million Singapore dollars. Taken together with the earlier $1 billion package, this amounts to around $2 billion of government support on top of what was already provided at Budget 2026. We believe this is the right response given the economic conditions today. At the same time, we recognize that the global situation remains highly fluid. The government is in close contact and close touch with trade associations and businesses, unions and workers, grassroots leaders and residents, and we are receiving regular feedback on the ground, and if the circumstances change, we stand ready to respond.
Against this backdrop, we are boosting our support for our businesses, especially for our small and medium-sized enterprises, SMEs. We do this because we understand that many SMEs are concerned about higher operating costs and their cash flow. We aim to help them better maintain their costs in the near term, while at the same time giving them the support they need to make business adjustment for the long run. So to assist our businesses, to help our SMEs, we will provide additional help in 3 ways. Firstly, we will make a time-bound enhancement to our enterprise financing scheme, in short, EFS, from September 2026 to March 2027. This will enable our local enterprises to better access financing to meet their cash flow needs. We will increase the government's risk share from 50% to 70% for the EFS SME Working Capital Loan and the EFS Project Loan. Businesses will have improved access to financing for their cash flow. We will also enhance the coverage of EFS Project Loan. Currently, I think we all know, the EFS Project Loan supports financing for overseas projects. We will, moving forward, expand its coverage to also cover and support domestic projects by local construction enterprises amidst higher costs. This will make it easier for them to secure financing to manage higher costs amidst a challenging environment. Second, we will provide a one-off SME Cash Grant to support our SMEs with their cash flow needs. Active SMEs with at least one local employee will be eligible for this SME Cash Grant. SMEs will receive a grant of $500 per local employee up to a cap of $2,500 per company. Eligible sole proprietorships, partnerships, and limited liability partnerships with at least one local business owner, but no local employees, will also receive a flat $500 grant. The grant will be dispersed in November 2026. Third, we will provide rental support for stallholders in markets and hawker centres managed by the government and government-appointed operators. Cooked food stalls will each receive $1,200. Market stalls will each receive $600. To help our stallholders over this period, the support will be dispersed across 6 months from September 2026 to February 2027. They will be separately notified of the details such as eligibility criteria. Now, beyond these measures, we are continuing to work closely with the sector agencies to support and strengthen our businesses through this challenging time. We are keeping a very close watch on how our businesses fare, and we stand ready to provide additional targeted support when needed as the situation evolves.
Hi, Ministers. Janice Heng from the Business Times.
Hello.
I think compared to the April package, which had some broad-based measures for businesses like the corporate income tax rebate, this time around it seems that the measures are mainly for smaller businesses in general. Is it fair to say that the assessment is that perhaps larger businesses haven't been that affected so far by the economic conditions?
I think we should look at the two packages in context. When we introduced the first package in April, the priority was to get out the assistance as soon as possible. And the impact was, I suppose, at the time, the economy, and the objective was to help businesses adjust to the sudden price shock, to cope with the sudden price shock. Now that there's a bit of time has passed since the initial energy spike and the initial crisis, there's an opportunity for us to be more focused and targeted in our measures, and that's why for this second tranche, the focus is indeed on companies that are more affected, still being affected directly by supply chain disruptions as well as energy costs, as well as SMEs, which I think have less buffer to be able to cope with sustained cost increases. So that's really the focus. In other words, the two packages I think we should see together. The first was really to prioritize speed, and the second package is a more focused one that looks at specific areas of help.
Hello, Samuel from the Straits Times. Two questions. Firstly, about the funding for these measures. So will there be a need for a supplementary budget anytime soon? And secondly, specifically about hawker centres and markets, so this is new in this tranche. So what is the rationale for intervening at this particular moment, and was it due to some feedback from the ground? Thank you.
I'll take the first question and then I'll let SMS Low take the second. On funding, we are expecting at the moment for the ministries and the agencies to work within what has already been approved under the Supply Act. And if there's a need for us to seek a supplementary budget, and procedurally we will have to do so, we will do so later in the year.
Thank you, Min, and thank you for the question. And this time around for this measures, this tranche of support measures, we are providing rental support to the stallholders in markets as well as hawker centres that's directly managed by government. That means NEA, HDB, SLA, and JTC, as well as the government-appointed operators. We're doing this to achieve two objectives after working very closely with the Hawker Association, the various cook food store, as well as the market store over the last few months to understand, what are the challenges they face, etc. Firstly, we want to work with them through this rental support to sustain Singapore's hawker culture and also hawker trade and food culture. At the same time, in so doing, we want to demonstrate that the government is being a responsible manager of these premises, the hawker centre and the market. And in fact, through this tranche of support measures, we expect that 15,200 stores will benefit from the rental support, of which 6,900 are cooked food stalls, and the remaining 8,300 are market stalls. The current rental support we expect will help the stallholders, whether they are market stallholders or the cooked food stallholders, to mitigate the cost increase of raw materials, packaging, as well as utilities as faced advent. These are the three things that they have highlighted to us in the course of the last few months of interactions and conversations. One will ask, why is it that the cooked food stalls receive more support than the market food stall? This is also another feedback that we receive from the cooked food stall. The higher quantum from the cooked food stalls reflects the broader range of the cost pressure that are experienced by the cooked food stalls holder, such as the energy cost from preparing, your hor fan, whipping up the meal at the hawker centre, and as well as the raw material costs.
Ke Yang from Zhao Bao. First, a broad-based question. We just had various support measures in the budget and then in April in Parliament, and now there's an additional tranche of it. While economic numbers actually look okay, apparently. So is the government anticipating that the situation is going to get a lot worse, and hence this preempt of assistance measures? And then specifically, we noticed that while there were support given to P2P drivers in April, but this time round they were not included in the support. So is there a reason for that? And if we are to compare, I know we shouldn't, but it usually happens, is that the next CDC voucher disbursement will be January next year, and it's a lower quantum, 300 versus 500 in June. How did the ministry, decide that it's a lower quantum, and people will have to wait for another half a year before the disbursement comes? Thanks.
Yeah, thank you. On the first question, the economic top-line numbers, the number does look better than we had initially expected at the beginning of the year. And as I explained earlier, it was largely, I think, due to some sectors doing well, and that in turn is due to significant investment particularly in artificial intelligence. But the performance is uneven across the economy. There are, as I again explained, there were businesses that are more directly affected by high energy costs and continue to be. There are businesses, particularly SMEs, that have less of a buffer to be able to cope with the increase in the top line costs. So there is still feedback that there is at different parts of the economy that help is needed. On top of that, there's also significant uncertainty about what's going to happen in the next few months. I can't say for sure things will deteriorate badly, but neither can I say that the economic performance will continue to be sustained. because we don't know if the investment in AI, for instance, will continue to be sustained. So in that context, I think the first package that we put out in April this year prioritized the speed of getting the support to businesses. And this second package is focused on helping specific needs arising from feedback from the businesses. And I think the overall shape of this 2 billion package is appropriate for the economic conditions of today. And it takes into account the uncertainty, it takes into account the fact that we expect certain things going forward, and it takes into account the feedback that the companies have been giving us. On the second question on private hire cars and taxis, in the earlier package in April, we had given out $200 to platform workers, which includes the private hire car drivers and taxi drivers. And this was applicable to part-time as well as full-time drivers, so a whole range of them. And the priority again was to help them with the adjustment to the increase in fuel costs. In the months after that, the industry has been making adjustments. The operators themselves have instituted fuel surcharges. The fares, I think, have also undergone some adjustment. So the situation today is at a new equilibrium. If there is another spike in fuel prices, I think we will look at it and see whether or not we can intervene and to support the drivers if there is such a need. On your third question, which is about the CDC vouchers, I think if you look at the whole totality of it, we have brought forward the vouchers from January 2027 to June this year, and we have added $300 to the CDC vouchers for the year, which brings the total number or total amount of the CDC vouchers to $800 for this year, and this is the same as last year. So I would see it in that frame, not that it's a decrease in the amount that we are giving, but overall we are giving the same amount as last year.
Hello, Claire from CNA here. Just want to ask, you were mentioning back then the first tranche was broad-based measures. Now we're looking at SMEs. What else, or in any other specific sectors, or maybe higher energy-intensive sectors or segments within the society that we're looking at now? And are you planning for any sort of new tranche in the coming months? Yeah.
This is specific to the businesses. You want to take that first?
Right.
Yeah.
Well, thank you for the question. Like what Minister Jeffrey Siow has mentioned, the two tranches should be seen in the context of April. Actually, very, very quickly, through his Ministerial Statement, he announced in Parliament the $1 billion measure, which really provide a lot of relief to the enterprises of all different sizes and sector who were experiencing back then, if you remember, energy price shock. And since then, for example, the MTI family and our economic agencies, we have been reaching out to trade associations. For example, yesterday, in my capacity as advisor to TACOM is Trade Association and Chamber Committee. Yesterday we had a very good session. It's a regular committee meeting so that we can share best practices, but we use that occasion to understand if there are emerging pain points, any issues, as well as to facilitate shared best practices. More than 20 over TACs came. And this is an example of how we, stay in touch with them. Some of the TAC personnel might speak down, and this is how we're trying to triangulate the issues and prioritize what are the measures that will really move the needle for them. And MTI, we put up the proposal to MOF, and we are grateful to MOF for agreeing to provide this SME Cash Grant. And this is really because the government recognizes that the SMEs, especially in the last few months, are facing considerable pressure in this challenging global economic environment. So we are stepping up our assistance and our support in one of the most critical areas that matters to the SME. They tell us cash flow is what really matters, and they hope that when they have a good project, they bring it to the bank can evaluate it based on its merit. So by widening the access to financing, by tweaking the risk share from 50% to 70%, for the EFS SME working capital loan as well as the EFS project loan, it really gives confidence to the bank to lend to our SMEs to pursue their project and to fulfill their orders. And for the SME Cash Grant, we expect that more than 160,000 businesses will benefit from the SME Cash Grant. We mentioned the details earlier, and the SME Cash Grants will be dispersed in November. And the measure today, like what Minister Jeffrey Siow has mentioned for the businesses, provide a boost of around $300 million in support of the businesses. Circling back to your question, for MTI, our economic agency, whether Enterprise Singapore or even Energy Market Authority, we work very closely with other sector agencies, for example, BCA, etc., to support the businesses in their sector to ensure that they remain resilient during this challenging time, but also through the measures as well as the programs we extend to them, they stand ready to seize opportunity when the conditions stabilize. So one example is the Energy Efficiency Grant. You'll remember that 3 months ago, when Minister Jeffrey Siow, in his ministerial statement, he highlighted that previously, before April, the EEG was extended to 6 sectors. And during the ministerial statement in April, Minister Jeffrey Siow announced that the EEG based here will be opened up to all sectors. And in a way, we have observed that companies of all sectors are really responding to adopting energy efficient equipment. So as of June 2026, we have approved close to 20,000 energy efficiency grant applications across all the sectors, with the food services and the retail sector seeing the highest take-up. So we will continue to, in addition to the broad-based approach, continue to work with the TACs and take sectorial approach to support them to remain resilient, as well as to ensure that they stand ready to seize opportunity. Thank you.
Thank you. And on the household side, actually our approach is the same. We have a base of support through the CDC vouchers for all households. But on top of that, we also have targeted support, more given to those who need it. I mentioned the cost of living special payment that's tiered by income. What this package does for households is indeed to provide this broad base of support, and if there's a need for greater needs, they also get more support.
Hi, Minister and SMS. I have 2 questions for both of you.
Sorry
I'm Anwar.
to interject. Please introduce yourself and state your media outlet.
Yeah, he was about to.
I'm
sorry
Anwar.
about it.
Yeah, I'm Anwar Saleh from Berita Harian. My first question is, given that the global uncertainty and ongoing conflict, are there plans to make the CDC voucher scheme and the rental support for stallholders a permanent regular scheme to support Singaporeans, heartland businesses and our market and food stallholders? And the second question is that, given that our economy is currently doing quite well, petrol and energy prices have quite stabilized, and supply chain, something that we've been worried about for the past few months, is also quite secure, what do you say to some quarters who think that Singapore government is just over-worrying, kiasu, or you heard this before, fear-mongering? Thank you.
I'll respond to the second question, and then maybe SMS can respond to the first. I think the key is for the government to be responsive to feedback and responsive to changes in the global environment. And we want to be able to do so if there is a need. In this case, this year we have done 2 packages in short order. The first, as I said, really to respond quickly to the situation, to help businesses adjust to a sudden shock. The second is just really looking at where we can provide more targeted help to the sectors that need it. And I think it is more of an issue of responsiveness rather than fear-mongering. Yeah, we look at the economic conditions. It is indeed better than expected, but at the same time, there's a great cone of uncertainty that a lot of the situation can change very quickly. When in April we were talking about the package, a lot of the questions were whether we were doing enough. And then today, the question is about whether we are doing too much. It tells you how fast the situation can change. The situation in the Middle East is ongoing. They're still fighting. We don't know what will happen in the next few days, even the next few weeks. So I think this is the correct scope of the package based on what we think the economic conditions are and will be going forward.
Thank you, Min. Back to the first question on on the CDC voucher as well as the rental support for the stallholders.
You're the right person to talk about CDC vouchers, by the way.
Actually, MOF should be answering because
No, you are the progenitor. You should talk about it.
And in the last few years, we have seen how the CDC vouchers have helped fellow Singaporeans, whether households, and then for the SG60 voucher is each fellow Singaporeans during last year SG60 to defray some of our cost of living pressure, but at the same time to also catalyze the demand and bring the footfall to our neighborhood center, to our market, to our hawker center to support our stallholders. And we have through not just the claim amount, but also the spent amount, as well as positive stories of how merchants are also going the extra mile, for example, to provide promotions as well as better deals for their customers who use CDC voucher at their store. And we have also seen how the supermarkets have responded to help fellow Singaporeans stretch their CDC vouchers by giving very attractive rebates at the respective supermarket. So we will, from the CDC voucher side, we will continue to use such numbers as well as heartening stories to make the case to MOF so that, as part of designing the trenches of support measures, MOF will consider, including CDC voucher as part of the future trench of support measure. I think the last call, the last word is actually with them. And on the rental support we mentioned earlier, it is really an example of how whole of government, not just MTI, but MSE colleagues, the NEA colleagues are always on the ground working with Hawker Association, and our Enterprise Singapore colleagues are really walking the ground, connecting with the Merchant Association to understand how to help them to transform and grow their top line, at the same time to help them to really cushion the pressure that they have experienced in the last few months.
Hi, Abigail from CNA Digital. Can I ask about the SME grant? How did y'all decide on the $2,500 cap, which I think may seem like it might not be enough for some firms that have cash flow problems? Thank you.
Right. Thank you, Abigail, for the question. We have, in MTI, like I've mentioned earlier, MTI as well as Enterprise Singapore, we work very closely with the trade associations to understand the challenges that the SMEs in their various sectors are facing. And of course, we cited some of the issues, whether is it the energy price and also rising costs of their materials. And we have to size that appropriately. And of course, it's an iterative process between the MTI and also MOF. If you're referring to a similar initiative that was rolled out previously, and at this point in time, we think that for $500 per local employee with a cap of $2,500, I think it's calibrated quite adequately for this tranche of measures, in addition to other government programs that's been made available to the SMEs from different sectors. For example, for the sectors that Enterprise Singapore, they are looking after, they would go out and work with the companies to ensure that they can benefit from Productivity Solutions Grant, PSG, as well as Enterprise Development Grant, and also even MRA, etc. So the SME Cash Grant should not be viewed in silo, but it also should be viewed in addition to the various grant support and programs that's been extended to our SMEs to help them stay relevant, resilient, and well-placed to seize opportunities that come their way.
Hi, Susanna from Xinmin here. Maybe this question is for Jeff. I'm just wondering, we know that we're just, less than 1 month to NDR. And why is it that this tranche of announcement is not waited until then to be announced? And are we just reading too much? Are we expecting something else to be announced during the NTR along the line? Yeah.
I have to leave the Prime Minister to announce what he wants to talk about NDR. But I think we have been planning this package for some time, taking into account what's been happening in the external environment, but also the feedback that businesses have been giving us. So we think this is the appropriate time for us to make the announcement.
Or just to add a little bit, could it have been the feedback you got? It's actually quite dire that this kind of assistance is actually very needed.
I think it is needed in some segments. I think given what we have planned earlier in terms of broad-based support in April, both for households and businesses, I think it was the right time for us to institute the next tranche of support. For example, I mean, the U-Save vouchers, we want to put out so that people know what's coming. You know, looking at what's ahead in terms of electricity prices, the likelihood that it will be sustained for some time, because the electricity formula, you know, is computed based on the first 10 weeks of every quarter. So there's a lag in terms of the filtering of the fuel cost to electricity prices. So I think the earlier we can give some indication actually is good for both businesses as well as households to better plan their finances.
So on the part of electricity tariff, I think we asked this question during the briefing, but we'd like to hear from you also. Given that we see that the extension of enhancement to the U-Save is all the way until January, are we actually expecting the assumption of the extension? Are we expecting to see the elevated tariff all the way until the 2 more quarters ahead?
Well, we don't know for sure. It's very hard to predict. Even if I want to predict the electricity tariffs for the next quarter, I won't be able to do so because the data hasn't really come in. When we did the budget this year, and we had already planned, in fact, incorporated some projection of the potential for higher electricity tariffs. That's what we already did. So we do try to incorporate some sense of what will happen in the future, but it's very difficult to predict. So to provide people with assurance, to let them know that this will be taken care of, that's why we think we want to announce the U-Save vouchers ahead.
I have follow-up questions. Kaya from Zaobao. First one is on, you know, there's rental support given to stallholders to help them offset some of the cost increases, but chances are some stallholders will still want to raise prices and pass on the so-called increase in cost to consumers. So would there be any measures in place to make sure that, you know, it doesn't eventually goes all the way to consumers and the stallholders get the best of both worlds in that sense? So are there any measures to make sure that they don't profit from it? So that's one. And the other question is on still on CDC voucher. For the tranche that was disbursed in June, is there any update on the claim figure and the expenditure figure? And then for the past, you know, we have done many rounds of CDC vouchers. Is the ministry looking at what are the sectors people tend to spend the money in, and is the ministry prepared to release figures on that? How much on services, how much on food, and other things? Thank you.
Okay.
Yeah, you can take the first one. Yeah.
Yeah, thank you, Ke Yang, for the question. On the first question, within the MTI family, we have an economic agency that's called Competition and Consumer Commission of Singapore. And the CCS, together with, in partnership with CASE, Consumer Association of Singapore, we work very closely with Merchant Association, Hawker Association, to share with them it's important to be transparent about price or any potential price changes, to be fair to the consumer, so that and ultimately, I think for consumers, we mentioned earlier the total number of stores that will benefit. Similarly, for the CDC vouchers, I think friends of the media will know that we have now slightly more than 24,000 participating heartland merchants and stores who can receive the CDC voucher. And we think fellow Singaporeans as consumer will, as they enjoy their meals or they go to the neighborhood center to buy goods and services, you know, they have choices. We want to make sure they have right choices, because at the end of the day, I think the consumer will make the final informed purchasing decision. And that is also why MTI and CCS years ago worked with CASE to roll out what we call the price kaki. Price Kaki app, and we hope you can download the app. If you have not done so, basically for the same product, you'll be able to see how much does it cost in this shopping, in this supermarket vis-a-vis another supermarket, or this store vis-a-vis another one. And you asked about the CDC vouchers and the numbers. Maybe let me give quick update. I think usually at the launch of the CDC vouchers, we will update the numbers. And in January this year, DPM GAN launched $300 CDC vouchers. I've given an update on the numbers. And then DPM GAN subsequently, about close to 7 weeks ago, 11th of June, then launched a $500 CDC vouchers. I will just quickly give you the amount that's been spent for this 2 tranche of CDC voucher, as well as the SG60 voucher, which only expire and lapse end of this year. So firstly, for the SG60 vouchers for the seniors, the total amount that is spent as of 28th of July, that means yesterday, is $775 million. $775 million for SG60 vouchers for seniors. And for SG60 vouchers for adults, the total amount of vouchers that's spent as of 28th of July is $978 million, which brings the total sum of SG60 vouchers spent as of 28th of July to $1.75 billion. I will come back to this number later. And for the CDC voucher, $300 that was launched in January, the total amount that was spent as of 28th of July is $345 million. And for the recent launch, the $500 CDC voucher launched close to 7 weeks ago in June, the total amount spent is $285 million. Now, if I can, sorry, a lot of numbers, but since you asked. Now, earlier on this year, I mentioned that when we launched the January tranche, you asked about how much was spent for the SG60 voucher last year. So we shared that it was 1.35 billion as of January. And now it's 1.75 billion. So the difference is 400 million, right? Now, if you add this 400 million of SG60 voucher spent this 6.5 months, together with the 2 tranche of CDC voucher, the total amount spent this 6.5 months is $1.03 billion of SG60 voucher and CDC voucher. Why do I cite this number? It is to, build on what Min Jeff has mentioned. We should not see the tranche of support measure in isolation. It all builds on each other. And this $1.03 billion of voucher has helped to catalyze the footfall and the demand for the goods and services and the meals at the participating heartland shop and also hawker, including the coffee shops as well. Thank you.
Well, the tranche of CDC vouchers was just issued, so I think the data will take some time for us to collect. So when that's ready, we will know. It's valid for some time, so it will be a while before we have a good fix on it. I would also say that actually there's some substitution effect. So actually what they spend on with the CDC vouchers themselves is not so critical or comprehensive, because if you have money to spend on groceries using CDC vouchers, you use your freed up income to spend on other things. So actually it's the overall spending that matters, not specifically what you're spending on using your CDC vouchers. So you should look at that in the totality. I don't know what you use. I use the CDC vouchers for spending on groceries. I go to 24-hour NTUC with my wife.
Because by the time you have time to shop,
that's my date night. So CDC vouchers has benefited me because we spend some time in the wee hours doing grocery shopping.
Yeah, but actually, back to Ke Young's question. Ke Young, you will remember that every time we launch a CDC voucher, in addition to sharing the claim number as well as the spend amount, we do give some breakdown, and it has been fairly consistent. And I've always shared with the friends of the media, if you add the spending at the food stall, the F&B for the teal color decal, as well as the grocery shopping, you will realize that close to 85% of the vouchers are spent on grocery and food and meals, with the remaining spent on services, etc.
Mm-hmm.
Yeah.
Thank you, SMS Low.
Oh, there's one more question.
We'll take one last question.
So just to add on for the CDC voucher, I just want to clarify because it's nowhere indicated. So the $300 to be coming in January. So we assume that it's going to still be half for the hardline merchants and half for the supermarkets. Just want to ask, based on what we know so far, the spending patterns and the utilization of it, is there any plans or a need to review how you want to separate this one? Because I know recently there's been some surveys done by some of the trade associations regarding some suggestions. Of course, that was due to the possible effects coming from the SRT, but then there were some suggestions for the CDC voucher specifically. So I wonder whether, just want to clarify the split, and also is there any plans to actually adjust?
You mean the RTS? Yeah?
Correct,
Yeah.
that's right.
Okay, thank you. I'll take this one.
Yes, please.
Yeah. Well, in the last few years since 2020, when we first launched the first tranche of CDC voucher, if you remember, we launched it on 13 December 2020. It come a long way. And we have been, in close partnership with FMES, HECS, and all the merchant association in Singapore. And they've all attested to how it has helped to bring, in fact, younger Singaporeans to the heartlands, to the neighborhood center. And we take that feedback very seriously. And that's why in administering the CDC voucher, we make a case to MOF that we do see value in continuing to ring fence half of the vouchers to be spent at any of the 24,000 heartland shop and hawker, with the other half to be spent at participating supermarket. The participating supermarket vouchers are also useful because it allows Singaporeans to go there and, really stretch a CDC voucher with the rebates that the supermarkets are giving. For now, we have, even as we conduct very extensive focus group discussions and consultation, we are weighing all the feedback accordingly, but we are mindful about tweaking the CDC voucher that has generally worked well for fellow Singaporean household and also the participating heartland. Now, we all know CDC vouchers, you have to spend it in Singapore neighborhood center. And that is what we want it to continue to play a role as a tool to catalyze footfall into our neighborhood center, into our heartland towns, and also catalyze spending in our neighborhood center, because they play a critical role. It is an important social mission, not just providing food, goods and services, but they are also a focal point for the community to come together. Thank you.